Every nation on Earth is saturated in debt. The United States owes more than $38 trillion, a figure so large it barely feels real. Japan owes more than double its economy. Europe owes trillions. China, the world's manufacturing engine, is built on credit. Even resource-rich nations, like Saudi Arabia and Norway, rely on borrowing. Debt is everywhere, in every direction, wrapped into every system that keeps the world turning. But here's the question almost nobody asks. If everyone owes money, then who is the lender? Who is sitting on the other side of the contract? Who is collecting interest from the entire planet? The answer is far stranger than most people expect. To understand it, we have to travel back to a time before the modern world existed. Centuries ago, kings didn't run out of spreadsheets. They ran out of gold. And when gold ran out, so did their power. Governments discovered quickly that you can only fight so many wars, or build so many ships, or feed so many soldiers before the vault goes empty. Out of this desperation came a new idea, one that would reshape everything that followed. Merchants and financiers offered rulers something revolutionary. We'll give you the money now. You repay us later, with interest, and your promise will be backed by taxes you haven't even collected yet. It was the invention of the public bond, a piece of paper that said, "Trust me." And people did. Because governments had something no merchant, no king, and no army had ever possessed before. The ability to tax generations that didn't exist yet. Over time, something shocking happened. Debt became a source of power. A nation that could borrow easily was seen not as weak, but as stable. A government that could take on massive debt was trusted more than one that couldn't borrow at all. The ability to issue IOUs transformed into a signal of credibility. Debt stopped being a burden and became the engine of civilization. Everything from railroads to electricity grids to highways to modern medicine was financed not by existing wealth, but by future promises. Nations discovered they could build the present using money pulled from the future. It was intoxicating. And it worked. Fast forward to today, and global debt has surpassed $315 trillion. That's 3 times more than the world produces in an entire year. And yet, the system hasn't collapsed. Why? Because the world discovered something profound. Modern debt doesn't need to be repaid. It only needs to be believed in. People assume the world's lenders are China, or Saudi Arabia, or Wall Street. And yes, foreign nations and wealthy investors hold large amounts of debt, but the truth is far more circular. The United States owes mostly to Americans. Japan owes mostly to the Japanese. Europe owes mostly to Europeans. Countries lend to each other, then borrow from each other in return. China buys U.S. bonds, while American companies invest in Chinese markets. European nations borrow from global investors while simultaneously lending through institutions like the IMF and World Bank. Developing countries borrow from rich nations, then reinvest their foreign reserves back into Western debt. It's not a ladder. It's not a pyramid. It's a loop. A closed circuit where one promise feeds another. Money doesn't sit still. It circulates in an endless cycle. Governments issue bonds. Banks buy the bonds. Central banks buy them back. Interest flows into pension funds and financial institutions, and citizens pay taxes that support the whole structure. Everyone owes. Everyone lends. Everyone depends on the same loop continuing. But above government sits an even larger force. Global financial markets. Trillions of dollars move through them every single day. Hedge funds, pension funds, sovereign wealth funds, and automated trading systems evaluate whether countries are safe or risky. Their judgment determines who can borrow cheaply and who suffers. When markets lose confidence, entire nations fall. Greece, Argentina, Lebanon, Pakistan, Sri Lanka, one after another. They've shown the cost of a confidence collapse. Currency crashes. Interest rates explode upward. Governments cut services. People lose jobs. Savings disappear. Markets may not vote, but they determine which governments survive. And then we reach the most important part of all. The part almost no politician will ever say publicly. Modern sovereign debt is not designed to be paid off. It is designed to be refinanced forever. When a government bond comes due, the government rarely pays it back. Instead, it issues new bonds to replace the old ones, the debt never disappears. It just rolls over like a subscription model. The interest payments become the real product, rent paid by citizens to the financial system. Government debt is not just an obligation. It has become the foundation of global finance. Banks use it as collateral. Pension funds rely on its steady interest. Central banks use it to control inflation and money supply. Investors treat it as the safest asset ever created. If the United States paid off all its debt tomorrow, it would not be a triumph. It would be a catastrophe. Trillions of dollars in financial assets would vanish. Banks would lose their safest collateral. The dollar supply would collapse. Markets would implode. The global economy would suffocate. Debt is the water the financial system swims in. Without it, the system dies. But there's a dark side to this machinery. When people say, we owe it to ourselves, it sounds comforting, but the money doesn't flow evenly. It flows from taxpayers to bondholders, from workers to institutions, from households to investors who own the debt. Debt is not just a system between nations. It's a transfer of wealth between classes. Those who own debt get richer. Those who pay taxes to support it get poorer. That's why inequality and indebtedness rise together. They are two sides of the same coin. For now, the system works because people believe it works. Government bonds are trusted. Currencies are accepted. Markets remain confident that promises will be rolled over again and again and again. But what happens when confidence fades? What happens when nations can no longer roll over their debt smoothly? What happens when the world's largest economies start to shake instead of the smallest? The truth is simple and terrifying. Debt is not numbers. Debt is truths, and trust is fragile. When it breaks, the entire illusion breaks with it. If this gave you a new way to see the world, hit subscribe. The future isn't written in history books. It's written in balance sheets, and I'll show you exactly where to look.